Is it the right time to buy insurance stocks? While the budget announcement of 2023 almost ticked all the right boxes, one sector which many felt it was unfair to is the insurance sector. Post the budget, all the bellwether insurance companies are down almost 25 to 30% since the announcement by our finance minister. This happened because of three main reasons. More incentives for people to shift to new tax regime. The new tax regime offers tax benefit up to rupees 7 lakhs, while it gives no benefits for deductions, which is a short-term negative for life insurance companies. Taxing of majority proceedings on those policies where premium is greater than rupees 5 lakhs, hitherto they were tax-free. Lastly, keeping Section 80C limit unchanged and no change in the 18% GST on insurance premiums. Many insurance companies' stock prices like ICICI Prudential, HDFC Life and SBI Life are already reeling under pressure, and this budget announcement further aggravated the fall. The fall has affected sentiments to an extent where people are wondering whether the insurance growth story in India is finished or still intact. There are very strong reasons for us to believe that the insurance story in India is very much intact, and this fall would be looked as one of the best buying opportunities 5 years down the line. Following are our broad reasons behind expecting this. Number one, India is one of the most underpenetrated markets in the world, and that opportunity still continues to exist. Number two, insurance companies in India would be coming with new insurance products taking into consideration the recent announcements. Number three, it also needs to be understood that the tax impact is only for the policies where the premium is greater than rupees 5 lakhs per annum. HDFC Life in its interaction with the stakeholders clarified that such policies constitute only 10% of their total policies. Number four, life insurance happens to be only one component in the overall insurance segment. There is motor insurance, health insurance, property insurance, and etc. These would continue to be in business as usual. And lastly, the overall demand for insurance will continue to remain buoyant considering the demographics of our nation. We feel investors who remain calm and buy this panic are likely to be benefit in the longer run. Yes, the pain will remain for a while, but will eventually subside, paving the way for higher growth opportunities in the future. To summarize, we do believe the negative overhang will continue to be in these stocks for some time, and the stocks will continue to be under pressure. However, an investor would find good bargains for longer terms in these stocks if he has some patience. Here we outline our favorite stock picks and the levels to consider them at in the upcoming months. Do note that we expect the stocks to underperform for some more time. Hence, we suggest entering only 50% at the current levels, considering the cheap valuations, and the remaining 50% can be added when the stocks hit our intended levels. Number one, ICICI Prudential Life. The stock has fallen from 720 to 420 and is currently trading at the lower Bollinger Band. As we can see, on the monthly time frame chart, a hammer formation is in progress. In this instance, we need to be a little patient and see how the chart develops. Once this hammer confirms end of Feb, we would look forward to entering this position above 457, which is the high for this month. As long as the stock does not cross this level, it may remain weak. Our entry level will trigger above 457. Number two, HDFC Life. This stock has a strong support around 340 to 350 levels on weekly and monthly time frames. It will also coincide with the lower end of the Bollinger Bands and oversold RSI at those levels. We can enter only 50% of the quantity now, and remaining can be entered at the 350 levels. And lastly, we have Bajaj Finserv. On the quarterly time frame chart, the stock is showing signs of reverting to the 20-day moving average, around 1040 to 1050. We have a strong monthly and weekly support around that level, along with overstretched lower Bollinger Band. Any fall towards 1050 levels will be an opportunity for us to buy. Here too, we would continue with our 50-50 rule. If you have any questions or comments, feel free to leave them in the comment section below. Don't forget to like, subscribe and share the video with your friends and family. We'll see you again in the next video. Stay tuned.